Hello, everybody. Today, we're going to speak about data, how important is data and data companies. And as you know, we already have a position in an amazing company called Moat Group Holdings, MWK. Today, we will speak about another company, which is still a SPAC. Actually, the Moat Group was an IPO, if I recall properly. But this one is a SPAC and deals with data. And we are here with Santiago and with Eddie. And I'm going to leave it to them. But the SPAC that we're going to speak today is still quite unknown. It's not been already hyped by the community. And the symbol is SAII, and it's called Software Acquisition Group. And they're going to take over a company, Otonomo. It's a data company which try to capitalize on data from car. It's very interesting, actually. I'm going to leave this to Santiago, that is gonna go and dig deeper in to the company for us, and then we're gonna go and do valuation. And it's very interesting because please stay tuned because probably the company is a fantastic bargain, a great chance to make money. Santiago, welcome.
Yes, good evening, guys. Thank you for inviting me. It's always a great pleasure. Thank you for your introduction. Exactly. So we're going to talk about SAII Otonomo. That one SAII is the SPAC and Otonomo is the company being merged with SAII. And once the merger will take place, they will be trading under ticker OTMO. So as Antonio was saying, basically data analysis is becoming more and more important because there are different sectors which are being disrupted, and we have treated in our other videos, which are real estate, automotive, e-commerce, and consumer product. The pillar for innovation, which is disrupting this sector, relies on data analysis. Otonomo is probably one of the most intriguing and most interesting stories within the data analysis universe because they are precisely placed at the universe of the big data analysis market. And they basically have already the data and the technology to scale up their services as fast as possible. We will see during our presentation that although now they collect data from automotive original equipment manufacturers, basically they can move across different verticals, and this makes their total addressable market even bigger. Let's go straight to the point. What Otonomo is about today. Basically, Otonomo is a cloud solution which gets data from connected vehicle, and these data are processed and by Otonomo and are distributed into an ecosystem of data consumers, which works like a marketplace made by automotive and mobility data. And this is the first leg of Otonomo business model. There is another leg, which is the Otonomo's capacity to provide a SaaS service to address specific needs around the mobility industry. The SaaS services clearly commands a higher operating margins and is licensed on a separate basis. The most interesting part is that this SaaS services is designed to enable participants to the marketplace to basically sort out any technical issues related to data management. Once you get the Otonomo SaaS services, you as a client are plugged in. And so you can reap the benefits of having certain information. So Otonomo is in the digital world, which, let's say, presents a number of complexity, is really leading edge in data processing. And in the amount of data they process is increasing every day. Today, each vehicle connected basically provides 150 data parameters per day. And but the number of inputs is increasing. And the more Otonomo gets parameters from connected vehicle, the more the business is going to be developed. So this is a big market, which could be worth 750 billion in 2030. And actually, Otonomo is addressing 10% of this expected market. Otonomo relies on 40 million vehicles connected to its platform, and it is expected to grow to 258 million in 2025. So as you can see, the expected growth here is huge.
Sorry, yeah, 4 questions that maybe our people would like to understand, and I'm going to go for the first 2. the question is, what is the kind of relationship that Otonomo has with those car manufacturers? Or what kind of a moat do you think Otonomo has? And also, what is the best use of those data? How those data are monetized?
That's an interesting question. Basically, the OEM, they have understood that data service could be another source of revenues, but they are unable to manage this data because it's not in their DNA. So original manufacturers, they just manufacture cars. So data analysis is another thing. So now the model is on a revenue sharing base. That's why original manufacturers are interested in partnering with Otonomo, and Otonomo is becoming a trusted partner for the majority of OEM. We are talking about 16 OEMs commanding 80% of the global vehicle market. So this is a win-win solution. It's mutually beneficial for both parts, for the manufacturers and for Otonomo.
Can you say that the moat would be also the ability to pile up on the amount of data?
That's correct. And I had something on top of that. So I think what you're saying is correct. And the real competitive advantage of this company, which is going to build up a sustainable moat over time, is their infrastructure. So the infrastructure allows them to analyze this data, and the analysis is just the first part. So basically, these data should be served to the market homogeneous basis in order to, so should be homogenized. They have the capacity to refine, to polish this data, and then they can serve across, as I was saying, across different verticals. So fleet management, for example, is one possible use. Electric vehicle services, predictive maintenance may be another one, parking solution, traffic management, even construction equipment is interested in getting autonomous data.
Let me add something here, guys. Hey, I am Eddie from Moat Investing, and as you know, we are a group of analysts and investors who like to dig deeper into the stocks we cover, trying to find companies with a real moat so that you can get the best analysis from the best companies out there that have competitive advantages. As we have said, Otonomo is the market leader for mobility-related data. So, because they have 4 times more connected vehicles than the second competitor, their data marketplace is kind of a secure business, as other developers will be willing to get the best available information for their applications, and Otonomo has it. For instance, they globally collect data from all BMW connected units. They get more than 150 data points per vehicle, including information related to mobility, driver behavior, car diagnostics, and safety. When it comes to software as a service, or SaaS, they are purposely focused on the industry's most profitable segments, including, as Santiago mentioned, dealership solutions, fleets management, insurance based on vehicle usage, and accident detection. Imagine how data could shape these businesses in the future. Just to set an example, the safety parameters of connected cars like the airbag status, together with the GPS data, could dramatically improve the emergency response efficiency in case of an accident. How much are clients willing to pay for this kind of service? We believe Otonomo is adding real value to the industry. So now, Tony, please tell us, how are we going to approach the valuation for this company?
The way we are approaching valuation would be in 2 parts, right? I mean, one part is dedicated to the SaaS business, another one to the market business. So we will value those 2 segments of the business in a different way, and then we'll add the valuation. Can we explain, Santiago, why we're doing that and what's the benefit of doing that in the valuation?
Basically, the SaaS business and the marketplace commands different margins. That's why it is useful to keep them separated in order to understand what is the contribution to value brought by each division. And this is what the SPAC investors have done when it was time to come across Otonomo valuation. So basically, they have started by looking at projected 2025 revenues, and SaaS business has been valued around 20 times EV sales expected in 2025, and marketplace business has been valued 10 times EV sales. These EV have been discounted for 4 years at 20% discount rate, and they came across a valuation range between 3 and 5.5 billion. We have basically made this process and to see whether this is also consistent with our DCF valuation, and it is in reality. So the valuation range is very wide, because between 3 and 5.5 billion, we have some like 80% valuation range, which is huge. But we have to consider that the SPAC is a blank check and the company is a startup. So current revenues are in the region of 300,000, and they are projecting in the region of 600 million over the next 4 years and half. It is reasonable to assume a wide valuation range. What is interesting is that what is worth between 3 and 5.5 billion has been paid 1.1 billion. And this is the interesting part of the story.
That's great, Santiago. It means the company is trading at a huge discount. Could you please tell us how do we approach the valuation with our own models?
We have basically split the business into its two main divisions, which are marketplace and SaaS. And until 2025, we rely on company business plan, and from 26 to 28, it's our own projections. We have split the EBITDA into the percentage generated by marketplace and the percentage generated by SaaS. And clearly, we have also used two different percentage of conversion of EBITDA into free cash flow to firm. So for the marketplace, we rely on 55%, and for the SaaS, we rely on 80%, because the business dynamics are different, the margins are different. SaaS business relies on higher multiples. The SaaS business can scale up faster, so it is important to differentiate these two components, because the dynamics of value are different. Overall, we came across the enterprise value of both division, which are 730 million for the marketplace and 2.5 billion for the EV. And then clearly we had the cash position, and we came across our base case valuation of 3.5 billion, corresponding to almost 23 euros per share fully diluted, so which takes into consideration also the issued warrant, and we have an upside potential above 100%. So here we have basically the multiples divided by each division, the EV sales and EV EBITDA enjoyed by both divisions, and here we have the consolidated multiples. So basically our base case valuation delivers around 5.6 EV sales and about 26 times EV EBITDA 2025. We have also made a best case valuation. What we have done in the best case valuation is simply changing the EBITDA margin. Here you see the EBITDA margin we have used in our base case from 1% in 2024 to 30% in 2028. And here you see the EBITDA margin we rely upon in the best case, from 15% in 2024 to 45% in 2028, and below there's also the breakdown by division. All other things being equal, our best case valuation delivers 5.2 billion equity value. So the procedure is pretty much the same. We have used the same free cash flow conversion of our base case scenario for the two division, the same discount rate, the same G, and we come across 5.2 billion equity value, which basically commands $33.7 per share, which corresponds basically an upside of almost 200%. Here you have also the EV sales, EV EBITDA by division and consolidated. So our best case basically delivers 8.6 EV sales 2025 and 24.5 EV EBITDA. And what is important to highlight is that our valuation approach and our valuation range is pretty much similar to that SPAC investors came across when it was time to value Otonomo pre-merger. So the valuation range identified by SPAC investors is between 3 billion and 5.5 billion. So our valuation range is between 3.5 and 5.2. So although we use a different valuation approach, we get basically to the pretty much similar conclusions. It is worth highlighting that the valuation range is very ample because there are still uncertainties regarding the business potential and the deployment of the business plan. We remain extremely bullish on this equity story because we believe Otonomo is at the epicenter of a huge data analysis market and relies on both data and technology to scale up its services from automotive original equipment manufacturers to other sectors like insurance, predictive maintenance, fleet, smart cities, electric vehicle services, etc. That's all for the valuation angle. We hope you have enjoyed our video, and we are available for any question you may have. And please don't forget to leave a like. Thank you.